I am Damonous. Jesus is my king. You are my family.
We're honored to welcome all of you here today. As you know, in December, President Donald J. Trump signed what's called the Tax Cuts and Jobs Act. It was the most significant reform of our tax code in a generation. And it's been a huge boom to our economy. Already, in the last month, we've seen over 300,000 jobs added. We've seen manufacturing coming back, wages are up, retirement accounts are stronger than ever. America is open for business again, and it really has been a phenomenal thing to see, be a part of, and experience as we've seen our economy really begin to boom again just in these last 60 days, 70 days since the bill has been passed. A member of the House Ways and Means Committee, the committee that wrote the tax cut bill, Congressman Jim Renacci. Representing the 7th Congressional District of Ohio, a man who has worked to promote constitutional government, promote individual and property rights, and defend traditional family values, our friend Congressman Bob Gibbs. Bob? Once again, I want to thank all of you for joining us at this special event. This really means a lot to us, and I hope it means a lot to you. It's very important on a personal note that these events really are for you, the everyday Americans out there who work hard. And so we hope you learn a lot from our great panel and our guests. So Curtis, I'll turn it over to you, sir. Thank you so much, everybody.
Thank you all for joining us. Ohio, the best. And thank you for joining us on the panel today. Thank you. So, as Brian was just saying, this tax cut, 2017 Tax Cut and Jobs Act, huge, the biggest tax cut in a generation, just amazing. So let's find out exactly how it's helping everybody. Why was it important to have this? Why do we need to have the Tax Cut and Jobs Act and you're the man who helped write it. It says right in the Constitution, your committee, Ways and Means, that's where all tax bills originate.
Sure. Well, it was important. I'm a businessman. I've been a businessman for almost 3 decades. What I found was, over the years, it's a complicated system. We couldn't compete anymore worldwide. We had too high of a corporate tax rate. Our statutory rate was too high. The effective rate was too high. Companies were leaving because they could compete by lowering their tax rate by going overseas. So we knew as a tax rating committee we had to lower the corporate tax rate so it could compete. But at the same time, when you lower the corporate tax rate, you allow businesses to grow and prosper. And when I was in business for almost 3 decades, I can tell you that I look back now, if I would have been able to have this tax cut while I was still in business, what I would have been able to do.
You wouldn't be in Congress, you would stay in business.
I still would, that's right. But you would add employees, which I would have done. I mean, every quarter I had to worry about writing that big check out to the federal government. Now that big check becomes less. The other thing that we knew was important is make sure that middle-income America was able to keep more of their money. So those were the 2 basic principles that the Ways and Means Committee worked off of. Let's make sure we can compete worldwide, and let's simplify the tax code at the same time. Let's make sure that middle Americans get to keep more of their money, and it's simpler for them.
I think Curtis, it's really 3 principles. We had to get more competitive in the global marketplace. Then we saw American companies leaving America because they weren't competitive anymore, and that's what they had, these inversions. And so when we get that corporate rate down to 21%, we're right in the mix of being really competitive. And then other is to make it simpler. It's getting too complicated. You're paying way too much money, just hours of time to get your returns done. And the third is do it so it grows the economy. So everything that's in this tax cut reform package is policies to help grow the economy, create jobs, and we're seeing that. We're seeing that. We had great jobs report that came out this morning, and we heard how years ago the new norm was just 1% growth, stagnant growth, and we're seeing growth over 3% and getting better. And I always like to liken, I can remember when President Reagan did the tax cuts back in the 80s, and we saw the longest economic expansion in our history, and that was really because of the tax cuts. Now we're tying regulatory reform with it, and we're seeing some really positive things happen. We're seeing companies coming back to the United States, and reinvesting, and you just heard the announcement a few weeks ago, Apple bringing back nearly a $250 billion, and they're going to pay $38 billion in taxes, and they're going to invest over $300 billion in the United States, and we've seen that across the board, from small companies to large.
Yeah, that's amazing. This Tax Cut and Jobs Act changed it, and what's that going to do?
Well, I can tell you as a CPA, when I had my CPA business, people would come in sometimes with shoe boxes full of paper and documents and say, here's my standard deduction.
So you're going to be ready for me, because that's what I do.
Yeah, well, hopefully not anymore, at least for this next year. But in many cases, they didn't even have the deduction because they didn't have enough. The standard deduction before was approximately $12,000 for a married couple. And they didn't realize they didn't have enough deductions to get to that $12,000. So 72% of Americans didn't itemize anyway. Now when you double to approximately $24,000, it just makes it more easier. It's going to simplify it. So people won't have to worry about all these bills and invoices and the shoebox, as I call it. They'll be able to take that deduction. That means the first $24,000 is tax-free, basically, for them. So people will have more money in their paycheck as well for those lower income individuals. So these are the kind of things that I know are going to make it simpler. And we've eliminated a lot of the deductions as well. So I think that is a key as well. And but we kept the good ones. We kept the ones that people wanted. They wanted, the interest deduction on their home mortgage. They wanted the charitable deduction. We kept some of those. When it came to credits, we kept the earned income tax credit, the child tax credit. We doubled it, as Bob said. So those were the primary credits and deductions that people wanted, and we kept them.
Four pieces that work together. We've got tax reform, tax cuts, regulation, regulatory reform, trade reform, which we've heard a lot about lately, and energy reform. So how does this tax cut work? And you put them all together and you get more bang than any one of them apart. So how does a tax cut work with all the other parts of the program to make America more competitive, to get the economy going? Let's talk about that.
I think all those things you mentioned are all interchangeable. And we started off in this Congress last year on the regulatory side, and we got more to do, but we've done a lot. One of the things I did was fighting the Waters of the United States rule, WATERS.
The Waters of the United States?
Yeah, which was really, basically, I like to say it was a land grab, because there's road ditches, my grass waterways, my farm come under federal control, and it just caused a lot of cost to our local governments, our farmers, our homeowners, as one example. I know one thing, we're trying to roll back some regulations. We're losing a community bank almost, one a day, I guess I've been told. And either getting absorbed by bigger banks or just flat going out of business because all the regulations have been put on them. You talk to your local community bank, it's really saddening, it's sickening, because you hear how they're struggling, and because they don't have the resources that the big banks have, and they have all these same regulations put upon them. And when you lose your community bank, your smaller businesses that drive this economy, you lose that relationship with your community banker.
And I understand it's community banks that do most of the lending to the small business.
Yes.
Well, I always said that when I first started my first business, I was a poor kid that started my first business with just a couple $100. I got a loan from a community bank. That's how I started. So I've always said that community banks, we need to make sure they're strengthened. We make sure, and that's the regulatory climate that Bob's talking about. But again, this Congress, the beginning of last year, we passed a number of regulatory killing bills. First time in a long, long time. I think if the president was sitting here, he would tell you that was the starting point of the turnaround for this economy. We eliminated many of those regulations, some that have been on the books for a while. We're going to continue to do that. He'd also tell you, I was just in the White House with him the other day, that he wants to continue to keep cutting these regulations as well. So we're going to continue to do that.
One of these agencies, and those folks, hardworking people, they wake up every morning and say, how can I make more regulations? That's not a good thing necessarily.
Well, that's the problem with, actually that is the problem with the growth of government and having too big of a government, because then you have employees, you're exactly right, get up every morning and say, how do we justify continuing our own jobs and our own
Their existence.
It's not funny, but I gotta laugh. Now, as I said, former full-time farmer. We're going to go through, how does a tax cut help working Americans, small businesses, farmers, energy producers. Let's start with our former full-time farmer.
Well,
I like to say that.
in agriculture, it's a highly capital-intensive business. Okay, you go out and buy a combine, $250,000 to $500,000 for one piece of equipment.
I could live in that.
Well, it's kind of funny. Everybody says, buy your house. Your house is your biggest investment you ever made. Well, when it comes to family farmers, that's not the case.
Yeah.
It's buying that equipment. And so having that expense, that deduction helps, and so it keeps more cash so they can do that. And then, of course, we mentioned earlier, the death tax, passing that farm on to the next generation. I think it's universal across this country. Everybody wants family farms to be producing their food for that's close to home. And so that's why it's so important. And then just lowering the tax rates. So when farmers are making some money, they don't have to send it all to Washington, D.C. So it's incredible. Now,
how do you see this tax cut affecting our economy, affecting our paychecks, affecting our businesses?
Well, I think that's easy.
Going forward.
I think that's easy. You're going to have more money in your pocket, both at business level, individual level. So I always think that it's your money. It's not the government's money. And you know how to use it better than the bureaucrats in Washington, D.C., believe me. And so you're going to see great growth. I think we'll see 3.5%, 4% or greater growth. I know there was a time when, after the Reagan tax cuts, we actually hit 7.7% for a short while of GDP growth. And so that's
that again.
7.7%. There was a time we hit for a short period of gross domestic product growth. And we've had more than a decade now of stagnant growth at 1%. That limits opportunities and jobs. And so you're seeing a renaissance here, and it's going to be exciting. I think with the other policies we're talking about, more limited government and regulatory reform, and renegotiating our trade deals, we will be in a lot better posture for the next generation.
$3.2 trillion, just think of it, in tax cuts for American families, including doubling the standard deduction and doubling the child tax credit. A typical family of four earning $75,000 will see an income tax cut of more than $2,000.
Thanks for watching. Please like this video and subscribe to this channel. Catch me on these alternate media sources.